Hey, good morning, guys. Hey, so today I want to go over ProShares Ultra VIX Short-Term Futures ETF. So basically, we're gonna go ahead and scroll down to About, right? So About, Uvxy provides 1.5 leverage exposure to an index comprising the first and second month VIX futures positions with a weighted average maturity of 1 month. The listed name for Uvxy is ProShares Ultra VIX Short-Term Futures ETF. You see the market cap, 1.70 billion, high today, $8.19, 52-week high, $135, low today, $771, 52-week low is $771, opening price was $816, the volume, or average volume, is 99.44 million, and the volume is 62.47 million. So we're gonna scroll back up and take a look at the week. Down negative 99 cents or negative 11.35% over the past week. Monthly down negative $1.77 or negative 18.63%. For the month, 3 months, we're down negative $3.59 or negative 31.71% for the past 3 months. 1 year chart down $47.27 or negative 85.95% for the year. And then the 5 year chart down negative $2,785.27 or negative 99.72% over the past 5 years. Going back to the daily chart. And what I want to tell you guys is, hey, if you don't really understand what you're gonna be investing in, don't invest in it. Always go up and try to find a website or find information about it. So what we're gonna do is open up the next tab and I'll click right here, what is the VIX Index? Because remember, it talked about the VIX, right? VIX Short-Term Futures ETF. So once again, I'm gonna click right here. I've already typed it in. And Cboe Volatility Index. The Cboe Volatility Index, or VIX, is a real-time market index representing the market's expectations of volatility over the coming 30 days. Investors use the VIX to measure the level of risk, fear, or stress in the market when making investment decisions. So this is basically talking about the S&P 500 and indexes like that, right? It's going to be monitoring different stocks, whether or not they're going to be at highs and lows and so on and so forth. So we're going to go back on this one, and we're also going to type in ProShares. So we got the ProShares website, which is ProShares.com, right? We're going to scroll down because it's talking about volatility. Click on volatility, and then we see we have Ultra VIX Short-Term Futures ETF, UVXY. Click on that, and then you have all the information that you need. That it's going to be talking about the UVXY and what it offers. It's talking about profits from increases in the expected volatility of the S&P 500 by the prices of VIX futures contracts, right? So it's talking about all the information that you need to know about before investing. They have fact sheets, prospectus, premium discount, analyst tools, nav history, and you can also register for updates. So go to this website, take a look if you're going to be trying to invest in anything like that. They have the products, resources, news, and insights right here. Go ahead and exit out of here. We're going to talk about exactly what we've done. So we decided to buy an option contract versus just buying out the 100 shares because that would have cost us $773, right? Buy the option contract, we do it for about 3 weeks, or in this case, 2 weeks and 1 day. One contract, value currently is at $91. Today's return, or last Friday's return, is negative $21 or negative 18.75%. Total return is negative $18 or negative 16.51%, right? So we're gonna actually scroll down one and say, hey, what did I do to kind of offset any cost that this contract had with me, right? So as soon as I bought this thing, I did a cover call against it at $8.50, right? It says 312, but I actually did it on March 11th, as you can see, March 11th. So they gave me $9, one contract at 9 cents. They paid me $9 on March 11th. We'll click on it, and it shows you one quantity. It shows you that was filled at 11:45 a.m. One contract at $9 or 9 cents, or 9 cents times 100 is $9, right? So we did that contract. It's the first thing we did. So we received $9 for this particular contract on March 11th. On March 12th, that contract expired worthless. We kept the $9, right? We're going to keep the $9 regardless. So now this is the actual contract overall, right? The call that I did for $7. It's now went down in value to $91. So we spent $1.09 or $109, because that $1.09 times 100 shares is 109. So first thing we did, like I told you, is that we spent $109. Then we minus out the $9 that we received in premium. That puts us at $100 even. So now our cost is actually $100. Now it's went down in value to $91. So we go minus 91, which puts us at a loss of $9. So total return, even though it says $18 or negative 16.51%, is actually half of that. It's actually a loss of $9 because we received $9, right? So what do we do in the following week to continue making money off this deal and not be negative and just let it sit? We click on view all options, we click on sell call, and this is the end of the coming week, right? March 19th. Since we know that we have a basis now that's had $9 taken away from it, we can now go over here and say, hey, I can take this $8 call. The break even for that person would be $8.36. Chance of profit for us is 71.94%. And as a change of negative 26.53%, don't really worry about that. But this right here reflects this. It has a change of 13 cents. So which means that we can possibly, we have upside potential possibly of about 13 cents possibly. But we're just gonna say we're willing to take $40 for this deal. So we take $40 for it, which means we take $40 on Monday plus the $9 that we've already taken. That's $49. So we now have $49 in our grasp minus the 109 that we originally spent. So 109 minus 49 equals at least $60 out there. So remember, the value of the contract is $91 right now. So as long as it stayed around this price range, it's still going to be worth $91. And if this doesn't sell off, this contract doesn't sell off at the end of Friday at $8 or $8.36, we're going to still have our option contract when the following week comes in, which is end of the week, March 26th, which means we can do this all over again. Now, in this particular case, would we want to take a premium? Well, it depends on what the share price is. If it has went up in value, then we may want to go ahead and just sell the actual contract that we own and not take a premium off of it, just come out of the deal. But if it actually has dropped down in value and they're willing to give us, you know, what we actually paid in, or even give us what we have left on here, let's say in this case 91 cents or $91, we would just come off with the premiums that we took from week 1 and week 2, right? Or the day 1 and week 2. So we would still come out ahead. So I don't want to go too far into what the option contracts are, but just know that we would come off ahead, and it all reflects back to our overall portfolio value. So let's say we're able to come out the deal with $60 total in profit. That means it will reflect this and turn into $7,520.55. And in the loose money that's not tied up in the Uvxy call option is now down here in our buying power. So hopefully I explained to you guys exactly what's going on with Uvxy, at least for me, and what I'm doing to generate funds from it. And this is why I just decided not to actually buy it, because it's one of those things that it could continue to drop down, and I just don't want to be stuck holding something that can continue to go down in value. And as you can see, it was actually going down. It has been going down, and constantly. That's the one day, 1 week, 1 month, 3 months. So as long as that S&P 500 continues to go up, this thing is going to go down. We do have some spikes where possibly the S&P had dropped a little bit and we had a spike up. So money can be made, but I would not recommend holding for a long period of time. Like I said, at the most 1 month. I did it for 2 weeks and some change. So we're going to see what happens. And but overall, I believe I'll be able to come out with some profit. So you guys, I want to say I appreciate all the love and support, the likes, the comments, the subscribing. I really appreciate it. Please keep it coming. And hey man, I really appreciate it. You guys have a great day. Enjoy yourselves. Bye.